Hello and welcome to the report of September 10th. We reported on September 12th. TLRY stopped out dead. The trade is done. And here are the results. TLRY got into this trade on July 28th and it ran all the way till it stopped out to 9:10, which is last Friday. And the results were we lost $266. It was a loss of 75% in 44 days. It was a one contract, 266 loss, one contract, 266 plus $2 in fee, a minus of 266, a new O of 268. Remember, TLRY was not originally on the loss leaders list. It was picked up as an open market scan as a test for, should be a test for stochastic uptrend DTE. Now, what did we do right? Well, we did follow the rules in getting into the trade. That was correct. What did we do wrong? We did not set a time decay exit rule. Now, what's time decay? Time decay is that an option contract expires, and as it gets close to expiration, it loses value. The value is mentioned as time decay. So what was happened here is we got into this trade and it never got a chance to get above the entry to initiate the move from the initial stop of 1250 to EPS. So the result was we were taking a full risk, 1 unit of risk to make 3 to 1. This is still at the basis of the 3 to 1 ratio rule right there. Now, even though we're going for DTE, that is how the ratio is set up. The result was, the plan was that once we got past 1605, we would have gone to EPS, and then when it got past 1960, then we would have set another stop here at first ratio, and then waited it out until it got a high enough area up in here around the 4th or 5th ratio to move it to the 3rd ratio, and so on and so forth, to eventually wait this trade out all the way to December 17th. This is a date two expiration trade plan. And as I mentioned before, this is a totally new field of million way trading. And the result is that I'm not happy with it, but because there are several traders that I've met who were very successful with it, I dived in head first into the shallow end of the pool, and it hurts. The account is, I kid you not, we are behind a tremendous amount right there. We are behind like 25 something percent on the SPY. The SPY is up to 22 something percent, and we are behind 25%. That's a gap of nearly a 50% gap. And that hurts, and that takes a lot of effort and time and discipline to make up a lot. So what did we do? What we did right was get into the trade and the proper rules. What we did wrong was not establishing that if it got range bound, such as it did here, and it got so deep into the option that we needed to say we needed to have an out clause. Now, in the Market Wizard books by Jack Swigert, there is a trader, there are several traders, not just one, but there's the 5-day rule. And that is, we got into this trade here on July 28th, 1, 2, 3, 4, 5 days, we're not making any money, out, done. Put the last bar low stop, that last bar low would have been here at 1388. The next day was 1388, so we would have been maybe 1385. Got to move to 1410, so maybe we would have been at maybe 1405, maybe even 14 even. And then it hit 14, and we would have been out here on the last bar low. On the Jack Swigert traders, they see this happening, they got out end of day, because a lot of the Jack Swigert traders are. Some are a lot are day traders, but a few are end of day traders, but they're watching the market as the market closes. And as the market closes, if it's not going in their favor, then they get out. So they would have got out here. Why? Again, even though we have an option that's more than 90 days, the time decay still affects. Now it's in pennies, granted, it's in pennies, but pennies count and the rules count. Look, we went through all of this pain for DTE and we lost 75% of the money. 75%. And that in the rules of options is unacceptable. So that would have been another rule. It said that if your option drops more than 50%, get out. Just get out. Don't sit there staring at it and get into a wish base of hopium. Just get out. And here, the 50% retracement would have been a very good point to say, hey, if you enter the trade and then and it's this wide and you're not, and it doesn't make any money on the first several days, get out. My other instructor, my head instructor, Courtney Smith, says the same thing. If the trade goes against him from the day out, by the third day, if it's not making any money, he goes, excuse me, he does last bar low rule and he gets out. So he would be out at the beginning of the fourth day. The fourth day wouldn't even be counted because the market would open, and then as time decay goes throughout the day, it's chipping away ever so slightly percentage. Well, you wouldn't even gone through the 6.5 hours. You would have been out, done. Right here in last bar low, open, boom, out. So that's what we did. That's what when we say what we did right, get into the trade. What we did wrong, not setting a time limit in case the trade is going against you. What we can do better is exactly that. So we have come up with some rules with the better rules, and that is we are going to initiate the 5-day rule from the Josh Wagner traders. I mean, these guys are well successful traders. They make like Ed Thorpe, he made an average of 20% per year. Now you say, oh, 20% per year is not a lot when you're making a lot of money in cryptocurrency and a lot of money in binary options and all. That's true. But can you do that for 20 years straight? There's the point. Ed Thorpe did it for 20 years straight. 20% return, 20 years straight. That is what attracts investors. That's what attracts big money. And say you're making 20% per year, year on year out, year in, even in the down years, and you're still pulling 20%. Bada boom, bada beam. I'm interested. And that's where the big money goes, because big money doesn't like taking big risk. So it's just, and big risk is taken usually by the retail trader, because we are trying to build our account faster and get into that bigger return. So those are that's the wrap up for the TLRY. It's gone now. TLRY does join the lost leaders list with a $268 low, and it will be it's on the radar now on the lost leader scanner. So the result is that if it pops up again, we will be back in this trade to get our 268 back. And with that said, we'll conclude today's report and the final report for TLRY. Stopped out and dead, gone. Who's next? Well, we'll see when the scanner runs. Okay, that will take care of. We do have a candidate. I apologize. We do have a candidate. The candidate is nope, that's not the candidate. Nope. The candidate that we came up with was Zigna. And why Zigna? Because Zigna had 53 million shares traded. 53 million shares traded. So this is going to be our new candidate for going forward in taking the slot of the open market slot for stochastics trading. And with that said, we are now done with the final report for TLRY on this trading session. Take care. Thank you and bye-bye.